Business confidence has kicked off 2024 on a sour note. That's as the RMB BR index dropped to 30 points in the first quarter. Experts cited political uncertainty as one of the reasons behind the negative sentiment in SA's business environment. Ahead of the national elections, economist at RMB Siobhan Redford joins us now with more insight. Thank you so much for your time, Siobhan. Further declines in the business confidence index. I mean, was this expected?
It wasn't really unsurprising. We ended last year with a very difficult kind of economic environment, major port congestion, which, we know affected our retailers and our manufacturers, going into kind of the festive season. So not a big surprise in that respect.
All right. I was actually surprised by the uptick in confidence in new vehicle sales, considering the kind of environment that we're in. How do you work that out?
Well, I think it's very important to realize it comes from a very low base. So yes, it was actually the biggest positive mover for the first quarter. But from 6 out of basically 100 people being satisfied with prevailing or respondents being satisfied with prevailing conditions to 16. Usually when we discuss the index, we talk out of 10, but to that gets a bit difficult with the levels for business confidence for new vehicle sellers.
Yeah.
When you think about it, what you've got to realize is that we probably are at the peak of the hiking cycle. So people are anticipating interest rates to come down. So those who have managed to kind of end this hiking cycle with a bit of spare money in their pockets, perhaps have decided, now's the time to go and, get that new car. We did see, an improvement in sales volumes so far relative to the last quarter. And so perhaps feeling a bit more upbeat, especially given that there is an expectation for interest rates to come down.
Yeah, you mentioned retailers earlier on, and of course that also saw a significant decline in confidence. Where is most of that pressure coming from? Because you would also think that maybe retail is one of the more resilient sectors in the economy.
Absolutely, but while it perhaps isn't always as sensitive to something as, say, load shedding, it is still affected by load shedding through the need for some kind of alternative energy to keep, certain operations going. I think, you also find that this port congestion that we've seen has had a significant impact on bringing stock into the country for the kind of summer season. You also have got the fact that, more stock is having to come, say, via either aeroplane or via the road rather than, using freight rail from ports, for example. So, it's getting more expensive to get that stock. We are still seeing retailers, on the non-durable side being affected by load shedding, but the logistics is making it harder. And then on the other side, on the demand side, we've seen that unemployment did get worse in the fourth quarter, and it probably is not going to get much better or better. We're not sure now, but it's not looking like it's going to get necessarily much better if it does get better in the first quarter. Inflation, it is coming down, but, it is still high, and we've seen some pretty hefty fuel price increases, which, we know takes away from other kind of the ability for consumers to buy other goods and services. And so, the demand side is quite constrained. Again, high interest rates also having an impact there. So effectively, they're being careful on setting up prices. Their costs are going up. Their profit margins are being squeezed, while demand is still kind of quite weak.
Yeah, indeed. And actually talking about load shedding, even Spur was actually saying that, this mitigation of load shedding with, installing the generators in all their restaurants, it's really just now a permanent part of their cost base, because now you're also dealing with having to repair and replace those generators. So, it is quite a sad state of affairs. What's also noteworthy is that there was an acceleration in selling price inflation. Is this not good news for the inflation picture?
It's a relatively small move, and so it's not something that we're overly worried about. That said, it does suggest that there is still some pressure in the market, and where people can kind of put through prices, they might be considering doing so. I think we've got to bear in mind with the last couple of years there've been a lot of kind of cost pressures that have come in, and because of the pandemic, because of massive floods in KZN in particular, because of riots, we keep having these hits which are adding to the cost for business, but with the consumer getting weaker and weaker given very high inflation and now high interest rates, it's been difficult to recover some of them. So it could be a bit of a pressure, but it's not something that's kind of flashing completely red on our radar as yet.
Yeah, of course. We're going to be keeping a close eye on that because, of course, it's not very encouraging to get such a low level of business confidence as we start off 2024 after we got that slight 0.1% growth on GDP in the fourth quarter. Thank you so much for your time and for your insights today, Siobhan. That was RMB Economist Siobhan Redford.